Mark Carney's budget has landed with a thump. $78 billion deficit. Lots of goodies in it. Let's unpack it with Sean Speer, my co-founder and editor at large. Sean, you're like a kid in a candy store today. You've been bouncing in your seat, excited to get your hands on this budget. You've studied a lot of these. You were in a prime minister's office and helped craft one. What do you take away from it? Give me some top-line thoughts.
Yeah, we've been anticipating this budget for some time. Listeners and viewers will know we didn't have a budget when we normally do in 2025, so the country has gone almost 12 months without one. And of course, this is the first from Prime Minister Carney. I would say, Rudyard, that there are some notable departures from the Trudeau government, not just on individual measures that maybe we can get into, but a way to think and talk about the economy. It feels a bit more hard-headed, if I can put it that way, than it used to. The Prime Minister Trudeau famously talked about growing the economy from the heart out. Prime Minister Trudeau did, rather. Prime Minister Carney says, quote, "The most immediate way to jumpstart productivity growth is to address structural impediments and increase investment in machinery, equipment, innovation, and infrastructure that allows workers to build faster and at a more competitive cost. This includes tackling longstanding weaknesses such as internal trade barriers, enhancing regulatory and project approval processes, and increasing competition. All proven measures to strengthen competitiveness, attract private investment, and supercharge growth." So in one sense, Roger, the government's diagnosis of what ails Canada's economy, I think, reflects many of the things that we've been talking about over the past several months. Where I think listeners and viewers may ultimately be disappointed is that diagnosis isn't matched, at least entirely, with a policy agenda that subordinates the government and elevates the role of market forces and companies to make choices about the deployment of capital and the allocation of capital in a competitive economy. Instead, when it comes to the government's climate competitiveness strategy, significant expenditures with respect to public infrastructure and so on, this is I think it's fair to say, a kind of government-centric understanding of how to get at the problems that the Prime Minister and his government rightly diagnose.
Yeah, it's something we've called on this program over the years Laurentian capitalism. It's a kind of Ottawa-centric, state-directed approach to economic development. We tried it in the past. There's some instances in history and experiences around the world where this can work. I think you summed it up well there, though, Sean. It's kind of like, we're not seeing a lower corporate tax rate here. We're not seeing a big effort to rework regulatory or competition reform. Nods in that direction, sure. But we're not seeing what might be the other thesis, maybe Pierre Poilievre's thesis. We'll have to hear from him. But, the trifecta of getting an economy kickstarted through basically the wisdom of crowds. In other words, maybe having a big deficit because you're using that deficit for tax expenditures, on tax cuts, on lost regulatory and other fees that you're collecting across the economy. Maybe you're taking your banking or your telecom sector and you're opening them up to foreign competition, or creating rules and regulations that allow for a lot more domestic competition, new entrants to come into the market. I just don't see a lot of that in this budget, Sean, and it does go back to that Laurentian capitalist thesis, doesn't it? That this is a prime minister that likes the heavy machinery of government. He's pulling on a bunch of levers here. I guess I come back to you by asking, well, what does this do in the short to midterm? Because this is the heavy machinery of government. A lot of these programs that are being announced today strike me as things that could take years, if not in the case of military spending, a decade or more to roll out.
Yeah, well said. I think that's a great encapsulation of what we're finding here. It's always good to talk to you because it helps to sharpen my own thinking. Again, just before I address specifically what you said, on the glasses half full side of our analysis, this budget refers to productivity 131 times. That is, as I say, a pretty significant departure from the Trudeau government's emphasis on equity and redistribution and a kind of social policy lens to budget making. If
but
I
Sean,
could put
just
it
to
that
stop,
way.
just have a bit of exchange here. Just to stop you on that, though. I mean, we have other governments in the past talking ad nauseum about productivity. The solution in this budget seems to be one of the big ones, really rapid accelerated capital depreciation to encourage investment. It's something that was in the Big Beautiful Bill Act in the United States, so it's probably partly an issue of competitiveness now vis-a-vis the tax treatment of capital in Canada invested versus the United States. But is that enough, Sean? I mean, we've tried this before. We've had these schemes before. The real question is, what's your tax rate? How does that affect your profitability? What is the extent to which foreign investors come into a country when our corporate taxes are uncompetitive vis-a-vis certainly the United States, and then layer, the uncertainty of tariffs over the top of that? So I take what you're saying. I just don't know if it's really all that new, or frankly, this budget and any of the metrics, as I've reviewed it the last half hour, I confess, it doesn't seem to push things aggressively. It seems to be putting its toe into a whole bunch of different puddles here to greater or lesser depth. And I just don't know, Sean, if that has the proverbial punch, the weight that our economy in this situation demands.
Yeah, I think that's precisely right, and I want to take up your point about the inherent risk of betting on some of these capital projects to boost economic activity over the short and long term. One of the interesting developments in the budget is that Canada's real GDP growth is basically cut in half relative to last year's fall economic statement in both the current year and the next year. And as you say, a lot of the measures we're seeing rolled out here involve investing, quote unquote, investing federal dollars into local infrastructure projects, some trade-related infrastructure, which may have productivity benefits over the long run. But I agree with your fundamental point, which is there seems to be a bit of a disconnect between the government's diagnosis of the short and long-term problems facing the country and many of its solutions. The notion of government being a quote-unquote catalyst is really at the heart of the budget. One point I want to emphasize here for our listeners and viewers, we've been talking about the fact that the deficit is indeed considerably higher than previously projected. It's about double last year's final deficit numbers. Virtually all of that, Rudyard, is on the expenditure side, which is to say we anticipated we may see some softening of government revenue. That's not the plan here. So the deficit is not inadvertent. It's not outside of the government's control. It is a function of the government's theory of the case, which is it's going to spend money over the short and medium term in the name of boosting competitiveness, boosting productivity.
Yeah, in markets and investing, we call it patient capital. They and to their credit, they want to make long-term, longitudinal investments that will wring productivity gains and therefore wealth appreciation and buoy Canadian standards of living 5, 10, 15, 20 years out. And I think they should be credited for that. But Sean, let's go back to where we find ourselves, though, which is a $78 billion deficit, massive federal debt issuance, which will have to occur to satisfy this deficit. And as Pierre Poilievre points out, and I give him credit for here, if the government's borrowing at basically a risk-free rate, it's going to pull capital away from the private sector, or at least private sector capital is going to become more expensive. So I'm curious about the pushes and the pulls here, where when you put your finger this heavily on the scale and you effectively say, looking at their deficit projections going forward, that the new run rate, the new normal in Mark Carney's Canada, a la Justin Trudeau's Canada, is a $50 billion average deficit every year, foreseeably forever. I don't know. That is a kind of a remarkable change, in the space of a decade that this has been normalized. And you could say, look, the GDP has gotten bigger as a percentage of GDP. It's not that large. But the point is that I see this, and here I'll throw it back to you. I just see it as a kind of crutch that governments in Canada, around the world, have gotten addicted to, dependent on, which is buying growth, buying prosperity through borrowing, as opposed to creating prosperity through innovation, smart investments in technology, and the smarter utilization of labor. This looks like, in some ways, like a kind of old playbook, Sean.
Yeah. On your point about the size of the deficit, it's worth noting that over the next 5 years, the period set out in the budget, we're looking at an annual deficit of about 2% of GDP. That is in a growing economy, not growing as fast as we'd like. But the point is, if indeed we fall into recession
Yeah.
or we experience some kind of downturn in the economy, we are going to start with a pretty healthy deficit that, of course, would only deteriorate further in the face of that economic turmoil. It's also worth noting that the debt to GDP ratio is climbing, and in turn, Rudyard, to come back to a point that you've made often on the show, our debt service costs are set to jump. Last fiscal year, there were about $53 billion. By the end of the planning period, there'll be about $76 billion, and of course, climbing. So
That's a lot of money.
This vision of government spending being not just a short-term stimulus, which it's been used at different times over the years, but as the foundation
Yes.
of a long-term economic agenda is a risky one. The costs will bear themselves in the immediate term, and I guess the Prime Minister is making a bet that the benefits manifest themselves over the long term. I guess we'll have to wait and see if that bet is proven right.
Yeah, and look, I will give the government a pass to the extent that governments all around the world are doing this right now. From Europe to Japan to the United States is running deficits at 5 to 6% or more of GDP. Yes. This is a problem across the advanced West, despite AI, despite technologies that we can get excited about. The fact is that productivity growth has slowed around the world. And in a lot of economies, especially more regulated, more government-directed economies like Europe, Japan, Canada, the United Kingdom, there's a growth problem. And governments are responding to the so-called affordability Yes. crisis, responding to people's anxieties about growth, how that trickles down, especially to younger people and younger cohorts in the population, by effectively going out and borrowing growth, at least in the short term. And I think there are all kinds of political reasons to do that. There's a populist threat that some of these governments feel is out there, and they have to respond to that. And there are geopolitical threats, obviously, from China to Russia, in our case, to the Americans and Donald Trump. So there's lots of reasons to be permissive here, or to try to think charitably about why one would choose a $78 billion deficit at this moment. So I want to put that out there. Come to you, though, just on a few irritants that I have. The CBC getting $150 million. The periodical fund, which basically, allows small newspapers to access money from the government to print editions, as if who is reading print editions anymore? Millions of dollars, in fact, tens of millions going into that program. There's just so many things here, Sean, where we didn't really take out the sheep shears, did we? And start cutting. Instead, it looks like all of the kind of fenestrated architecture of public finance across this bloated carpus that is the federal government, much if not all of that, Sean, does it not remain in place?
Yeah, well, this is exactly right. And it is a criticism we've had of the Carney government's approach to these issues. Again, understanding it inherited a large-scale deficit and a massive increase in spending from its predecessor. It obviously is dealing with difficult issues with respect to the Trump administration and the tariffs' effects on Canada's economy and all the rest. But the government decided to conduct a comprehensive review of government spending, which really amounted to a kind of weed-whacking exercise. Roger, you got the sense that the government wanted to extract a pound of flesh from different departments to be able to demonstrate that it was balancing, quote-unquote, austerity and investment. It wasn't a more fundamental assessment of what the government ought to do and not do. So the budget demonstrates some progress towards reducing spending in certain areas. It estimates that it should lower over time the number of public servants by something like 40,000. Of course, that's against a run-up of over 110,000 employees during the Trudeau era. And so you're kind of left feeling on this particular point a little underwhelmed that, yes, it's good to see that some of the spending growth is being offset by spending reductions, but it is not an exercise motivated by really
Yeah.
thinking carefully about what government should do and not do. And that's demonstrated by the fact that we have, at the same time, spending in some of these other areas that are pretty hard to justify.
Yeah, look, I'm all for fun, but should the budget be mentioning that we're seeking membership in the Eurovision Song Contest for Canada? I mean, come on, 1,001 priorities facing the country. I know I sound like a curmudgeon, but if this is a serious moment, and if we are meeting the moment, and if this does warrant a $78 billion deficit, then why aren't we not goring a few sacred cows as we go along? Sean, as we wrap up, let's talk about politics. There's
Yes.
reports out that a Conservative MP from Nova Scotia is indicating that he is seriously considering crossing the floor and will do so in the coming days based on his reading of the budget. What do you make of that? And what do you make of all this election chatter up until now, the last 2 weeks, that this budget could trigger an election? Could it be something else, Sean? Could this budget trigger a Carney majority?
Yeah, what's interesting is if you were trying to score this dispassionately from this question of whether there's enough there for the different parties to figure out a way to sustain the government and avoid an election, you could make the case that in a way it's almost perfectly calibrated to find it virtually impossible for the opposition parties to support it. For progressives, there are the spending cuts that I mentioned that they could hang on to, particularly because I think we can count on PSAC and some of the big public sector unions coming out against the budget. There is the removal of the emissions cap on the oil and gas sector, and other measures that that progressives could point to if the NDP, for instance, wanted to oppose the budget. And then for the Conservatives, of course, there's the extent to which this is at its core a fundamentally Trudeau-esque fiscal track. Government is growing, the deficit is worsening, the return to balance is pushed off longer and longer. And so it's going to be a fascinating 24, 48 hours. My hunch is that the parties will organize themselves in a way to avert an election. But I think it's fair to say the Prime Minister and this government have not gone out of their way to avoid one. And in a way, the Prime Minister is almost calling the NDP's bluff and saying, we dare you to bring us down and force us into an election, which could happen as early as this Friday, given the schedule for budget-related confidence votes.
Yeah. Just let's end on that emissions cap. You just mentioned it. We've got a lot of fans and listeners and viewers in Western Canada. It'd be interesting to see how this is reported out in the days to come. There seems to be some language around this that the removal of the emissions cap will be because the industry no longer needs it, because the industry itself will have reduced emissions through primarily this technology. The budget even, I think, mentions that it's unproven and somewhat speculative technology at scale. That's carbon sequestration. What do you make of that, Sean? Did you read this as like a de facto, the emissions cap is gone tomorrow? I seem to suggest, I don't know. Well, again, we'll have to see once ministers are questioned and answers are provided. It seems to suggest this was something that would happen as a result of a series of investments in the industry to remove emissions, as opposed to an a priori release of the cap on the basis that those investments would be forthcoming and that those emissions would be reduced.
I think that's part of the story. The other part, Roger, is the budget does not follow Pierre Poilievre's calls to repeal the industrial carbon price. In fact, quite the opposite. It sets out a plan to make the carbon price on industry far more stringent. And so, in a way, on this idea of the Prime Minister calling the bluff of various political actors and business leaders, you get the sense he's saying, fine, I'll get rid of the emissions cap on the oil and gas sector. It'll be superfluous because not only am I going to expect you to spend capital on different types of emitting reducing technologies, I'm also going to turn the screws on the industrial price. And I suspect that will cause different parts of the industry to respond in different ways. But I'll be watching carefully to see both how Polyev responds to the notion that the industrial price is actually going to get more stringent, not less, and what that means for industry at a moment when it's already facing a lot of pressures, including from U.S. competitors who aren't facing any similar environmental regulations or costs in their own decisions around capital deployment and so on.
Let's just end by each doing what we can do because it's our podcast, it's our YouTube channel. Give this budget a grade, Sean, and a quick reason why. A letter grade.
I'd say it's a C, and maybe that's a relative grade. But I think the government's diagnosis of the problem, positive steps on the immigration file, essentially returning to Harper-era immigration numbers, both for permanent and non-permanent residents. Some of the capital expensing provisions that we've talked about. This is not the budget I would have written, but this is also not the budget that Justin Trudeau would have tabled. In that sense, it is the best budget we've seen in some time out of Ottawa for whatever that's worth.
Yeah, I give it, B minus, C plus. It had the potential, as you say, to not be a Justin Trudeau budget, but to me, the fact that we still end up with a $78 billion deficit suggests that a lot of the same fundamental thinking, not of Trudeau, but just of Ottawa vis-a-vis the rest of the country, the sense that there's an economy to be planned, that the purpose of politics is to deploy large amounts of borrowed public funds to, articulate a political vision and an economic vision for the country versus what I just wish we'd find a leader at some point who just had some fundamental faith in the Canadian people, in their ingenuity, in their resilience, in their desire and willingness to compete and succeed, and to give them incentives from taxation to regulation to competition reform to do just that. In effect, to say, let's get government well and truly out of the way, to let the genius of this country, which has been expressed at so many times in our history, our genius as traders, our genius as entrepreneurs, our genius as nation builders in our own right. And yet again, here, Sean, I guess this is where, I feel the cup is half full. We've fallen back onto, I think, a very conventional way of thinking, a very conventional set of assumptions about the role of government, the role of public finance, and, the nature of the economy. And some people will say, look, that's what we have to do. It's what every other country is doing right now, but it's not what Ireland did. It's not what Singapore did. It's not, you pick another smaller nation, albeit, but in Israel that, figured out how in an infertile desert to create a high-tech agricultural powerhouse. I don't know. I think Canadians could rise to the similar challenge that all those other countries did and find our way to a prosperity without government being our nursemaid.
Yeah, well said, Rudyard. This isn't the first time that you've made the case for an economic agenda rooted in the notion that we ought to let 1,000 flowers bloom. My former boss, our friend Brian Lee Crowley, distinguishes between the gardener and the designer. And as you say, it would be nice for a change to have a budget conceived in the image of a gardener, as opposed to a designer. But I think this one in part because of Mark Carney's own kind of political ethos, falls very much in the in the trap of a gardener. And so the risk, of course, is that we run up spending, we run up deficits and debt, and in the end, we don't get the growth that is anticipated.
Yeah. Well, again, hats off and congratulations to our friends at the CBC. You're $150 million richer. We wish you well. We enjoy beating you in the politics podcast category.
Here.
Most days of the week here at the Hub, we are in the top 10, trouncing a whole bunch of Canadian shows produced by the CBC, by your tax dollars. So if you enjoy non-government funded media, come over to the Hub. We have some new membership plans. They're up on our website, www.thehub.ca, and really appreciate everybody's support. Sean, we'll continue to dig into this tomorrow with all kinds of writers and commenters pulling this budget apart to provide analysis and insights to our readers, viewers, and listeners. Thanks so much for doing this today. And man, I can tell you're jazzed by the budget. I love you for that, buddy.
Yeah, well, I wish there was. I wore my red shirt for all the red ink. But yeah, thanks to our team for staying up late, and encourage our listeners and viewers to check out tomorrow's newsletter and the website over the coming days. It's going to be jam-packed with analysis on the big picture of the budget, as well as drilling down on some of these different measures and what they mean for industry and Canada's economy.
Awesome. Thanks, Sean. We'll talk to you soon. Bye-bye.
You bet. Bye-bye.